Hey, my name is Tucker Kraus and welcome to my channel. In today's video, I'm going to be taking a look at Alphamin Resources in a follow-up to my Why Invest in Tin short that I did quite recently. Now, I have done Alphamin in the past for a video, but frankly, a lot of my older videos I think didn't age all that well. I heavily over-relied on like PE ratios, comparing to other companies and EV to EBITDA ratios, and not using some of the more in-depth metrics and stuff actually going into the company's deposit and stuff like that I do now, which I prefer what I do now by a lot. That's why I'm doing it. And so, do comment down below if there are any of companies I have previously looked at that you would like me to look at again in the future after I've exhausted the uranium sector for videos to do on. So without further ado, smash that like button. Now, let's get right into the video.
Alright, so we have Alphamin Resources here, trading with the ticker AFM on the Toronto Venture Stock Exchange and AFMJF on over-the-counter exchanges in the United States. They're currently trading at 62 cents per share with a market cap of $743 million. And this is price per ton of tin of $3,367 per ton of tin. Now, that seems really bad, but you have to keep in mind, 1 ton is 2,204.6 pounds, so their price per pound is actually only $1.53 in US and $1.93 in Canadian dollars. So, of course, you can't really perfectly compare commodity to commodity, but at least compared to a lot of the companies in the uranium space, $1.53 per pound is really good. And they also have a PE of 207.87 or 197.5, depending at which exchange you are looking at. Now, Yahoo Finance also shows a 9.884 PE for them. So, I mean, that's pretty good if they expect their PE to come back and contract that much, presumably because they're more profitable and presumably because they don't expect the price to fall. Now, this is just some of the Toronto Venture Stock Exchange charts to do the higher volume. It is an old company, but as we can see here, starting in the about 89, is it? And then they became what they are today in about fall of 2014, so I also have the 5-year chart pulled up here. We could see in the more short term here, it's been relatively flat in this area here, though going back to this 5-year chart just in the last year, it's of course shot up significantly, though compared to this, yeah, it's got a long ways to go. But once again, Alphamin in the 80s and 90s compared to today are basically different companies, so that's not entirely fair to compare here over up to here. But looking at some snippets from their presentation, they have a proven and probable grade of 4.01%, which is, according to the International Tin Association, one of the highest tin grades in the world, and they account for 8% of the total tin reserves, with 133.4 kilotons of proven plus profitable reserves. And so they are located in the DRC, so not a fan at all. That's not a good jurisdiction. And although we can see they are the lowest quartile cost producer of tin, and they produce 4% of the world's mined tin. Look at some of their share structure. 1.192 billion shares outstanding. I just like when companies have like 500 million. So this is, at least, you know, for these more penny stock type things at least. It's different when you have 500 million shares outstanding for a several billion-dollar company, but that's not important. But we can see here, not a fan of how diluted those shares are at all. Like, because even with their nearly billion-dollar market cap, they're still trading below $1 per share. I don't like that. So we can keep going to their shareholders. We don't see any insiders. I don't like that. I don't like when the executive management of a company isn't holding on to their company. It makes them look like they aren't confident in the company. So I would really hope that they fix that up. Not a fan, and they have 84% ownership of their mine. As I noted in my tin short, it is everywhere in electronics and green energy, and is the metal most impacted by new technology. They do have a vision of becoming one of the world's largest long-life tin producers, and they of course want to increase their life of mine and scalability potential, and their management has 85 years of experience in African mining, and they make sure at least 4% of their expenses are allocated to community development. So if we then continue going, we can then see they're of course working on exploring further so that they can expand their current mine that they are producing from the Huma-Huma North mine, as well as exploring their Huma-Huma South deposit. They want to declare a maiden resource by the end of 2021, and in their BC Ridge, they want to find at least one more solid deposit or discovery, so that they'll be able to produce from more than just Huma-Huma North. So this is just from an interview I listened with the CEO. The deposit was discovered in 2013. Alphamin's been producing since late 2019. They plan to eliminate their debt prior to 2022, and like I already noted that, they spend 4% of expenses on building up the local community. Alphamin is also the only industrial mine in their province of the Congo, and the CEO did have to admit, obviously, that the Congo is not a good jurisdiction, but he did at least try and comfort us by saying, okay, the local government and the communities around them have been good to Alphamin, so that does make up for it somewhat. And then we can see they do plan to implement share buybacks and or dividends, as well as accelerating mine development and exploration due to their record profitability. Thank you. Share buybacks. That's what I really want to see because they have way too much share dilution for my liking. Alright, so we have their currently producing project in Palma North. It has 228 kilotons of tin, and now you might be wondering, why is that a different number from here? Well, this is proven plus probable. I always use measured plus indicated plus inferred instead, and so that's what I did here, just out of their technical report, because that makes it line up better with all the other companies I've looked at. And M plus I is typically shown more often than proven plus probable, all that stuff, whatever. Not too important. There's also a 3.2% royalty on the mine, of course, and that coupled with their 84% production. They have a grade of 4.01%, and they have $53 million in capex, though that is of course mainly sustaining capex because the initial capex has already been spent, with an OPEX of $5,417.44 per ton. But of course, tin is something like $30-something thousand per ton, so of course their OPEX is substantially below where tin is currently trading at. And taking this size and dividing it by their tin production per year, it gives a production time of 14 years. And that does take into account their own very low 72% recovery, since there was of course no timelines per given, and their net present value calculation was only shown in its total and not given us year by year. And they also have a 30% tax rate, and the deposit does also have very small amounts of copper, zinc, lead, and gold, but not enough to really factor into the DCF or anything like that. And of course, with Palma South being a exploration, nothing we can really go off there, so let's get into the discounted free cash flow I built for Alphamin. Alright, so here we have our discounted free cash flow fair values for Alphamin, and so of course keep in mind I always use a 10% discount rate and 50% capex and opex inflation. Of course that inflation on their operating expenditures and capital expenditures means their free cash flow is lower because they are spending more, and using a 10% discount rate means you are making those future cash flows worth less by discounting them by a higher percentage, but that's all standard stuff. And of course it also doesn't include the exploration going on at Palma South and along the rest of the BC Ridge, and it doesn't include the extra little bit of gold and things like that at Palma North. This is just the tin they're producing from Palma North. And so we have a couple different tin spot prices here, and so first up we have at $15,000 tin, we see that it is substantially overvalued here for Alphamin, and that was the price back during the COVID March 2020, April 2020 lows. And so then at 20,000 tin, which is where it was in about December of 2020, we see that Alphamin looks a little bit overvalued, but not horrendous like if we use this much lower tin price. But of course, tin is significantly above either of these, and tin is at $34,669 for 1 ton of tin. And so at that price, we see that Alphamin it deserves at least a double to hit its fair value. And I use the current price as the best case scenario since tin is just off of an all-time high right now. So depending how bullish you are and if its price is going to keep rising, it could be even better than this. But let's say it pulls back somewhat, as long as it stays above $21,700 at Alphamin's current price, then they are at fair value. But let's say if tin even pulls back to say about 25,000, which when you look at some of the tin charts seems quite reasonable if it could stay in that area, it would still likely be decent upside here for Alphamin. So all in all, they do look pretty good, but let's quickly look at that chart really quick. Alright, so just here's a chart of tin's historical price, and you can see that if they can remain at about that $21,000 mark as we saw here, that seems to be about regular for tin's price, as we can see just going along here. So it is very possible that if tin pulls back significantly to more of the average price look about for it, then we could see that Alphamin might not be the best buy, but if tin continues to move higher or is able to remain at this much higher number, then Alphamin could actually be something that is very interesting to buy. But of course, this isn't financial advice. Make sure to do your own research. But thanks for watching.